weekly time frame, of course, we can see that price got to 61.8% fib level, reacted off it to the upside, and then it traded into this zone right here, into this, tapped into this level back here, and is reacting off it. So I'd like to see price sell off to take out these points B and then trade all the way into this fair value gap, starting to the upside, right? And then on our daily time frame, I beg your pardon, it's still trying to load. Right, on our daily time frame, you can see that price has traded into this zone, price traded into this fair value gap. And then I am expecting some sort of reaction from this point to the downside. Expect price to trade all the way into this gap here on daily time frame before it continues its buy to the upside. And for a 4-hour time frame, right, we can see some gaps here. And I would just like to draw my fib from here to here, right? From here to here. I expect price to, trade back into this zone. There's an RFED here, a fair value gap here, and a fair value gap here. And price coincides with 61.8% fib level. So when price gets to this region, I expect some sort of a reaction to the upside. I expect price to keep buying when price trades into this region. And if price doesn't react from this region, then the second point that I expect price to come into, if it violates that region, I expect price to trade all the way here. But most likely not, because there are a lot of reasons why price should really buy off from 61.8% fib level. There's an RFED, and then price and 61.8% fib level, which is a very strong point for price to keep buying. When price sells off to 61.8% fib level, price should keep buying. So for today, I am expecting a sell-off of the dollar. On our 1-hour time frame too, I expect a sell-off of the dollar to fill up all of these imbalances and all of these fair value gaps here. So you should watch out for your trade setup and just short the dollar. For today, I am expecting that the dollar should sell. And of course, we always sell at premium. When you see your setup, be confident enough to take the sell of the dollar. And down to Euro USD, right? Still trying to load. And the network is kind of crappy. Right, on our weekly time frame, we can see that price is clearly bearish. And then from our fib level, price got to 78.6% fib level and traded downwards. Then it retraced slightly into 61.8 level after trading downwards. And there's a bit of a reaction from 61.8% fib level to the downside. And on the weekly time frame, I expect that price should get into this fair value gap long term. Price should sell off into this fair value gap on the weekly time frame. And for a daily time frame, right, I still expect a sell-off of Euro USD. Price got to 38.2% fib level, and there's some sort of reaction to the downside on our daily time frame for the Euro USD currency pair. I'm just going to take this off. Where your pen? All right. So for our 4 hour time frame, right, we can see that price is clearly bearish to the downside, right? And what am I expecting price to do today? Being the 27th of March 2024, I expect price to buy to this level here. Expect price to trade into this level before it continues its sell to the downside. Okay, that's it. Just give us a little bit of time so that this chart will load. Okay? Mhm. 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 All right, we're back. Apologies for that hitch. Then down to a 1 hour time frame, right? Kindly bear with us. This is Nigeria. All right. All right, we are back. From a 4 hour time frame, I said we're expecting a buy to that fair value gap residing up. And then when price trades into that fair value gap, we'll be confident to take our sale from that region. Still trying to. Apologies, guys. We're having network issues and glitches here. All right, so we're back. All right, we're back now. Apologies for the hitches experienced during the course of the CDA. All right, so on our 1 hour time frame, right, I still see a buy of Euro USD to the upside. We have a lot of fair value gaps here and a lot of voids that needs to be filled. And remember that we always want to buy at discount. So when you see your entry to the upside, for me, I'll be looking out for the base, continuation pattern, and variation on the 5 minutes. But I haven't seen that play out yet on the Euro USD. So I'm just going to keep my fingers crossed and look out for my setup to buy the Euro USD, I beg your pardon. So I'm still expecting the price is going to buy to these levels, filling up all of these gaps before it continues its sell to the downside, right? Moving on to I'm sorry, GPP USD. Crave your indulgence to really bear with us. This network is something else today. Okay, why don't we try to sort this out? We'll just go on a short break. Okay, we're back now. We just have to proceed. Apologies for all of this. All right, we're back. All right. For our weekly time frame, right? For the for GU, I'm just going to draw my fib from this point to this point. Well, we can see that price got 78.6% fib level on GU on our weekly time frame, and there's some sort of a reaction from that point to the downside. And where do I see price coming to long term? I see price trading into price coming into this zone, into this fair value gap on the weekly time frame. So I'm expecting some sort of sell-off on the weekly time frame for the British pound US dollar. I beg your pardon. And on our daily time frame, I still expect a sell-off of GU, right, into this zone, into this fair value gap on our daily time frame, long term, of course. And then on down to a 4-hour time frame, right? I'm just going to run my fib from point A to point B, right? We can see some sort of gaps here. I expect price to buy all the way into this fair value gap, which coincides with 61.8% fib level. And if price doesn't react from this region, then I expect price to come all the way here, which also coincides with 78.6% fib level. So price will buy all the way into either this level and react off it, or buy all the way into this level before it continues its sell to the downside. So for today, I am bullish on GU. And down to 1 hour time frame, of course, I also expect that GU will buy all the way into all of these gaps to the upside. I expect GU to trade and fill up these gaps before it continues its sell to the downside. So for today, I expect that GU and EU will buy and then a sell-off of the US dollars. If you have questions to ask, or if you have your own bias for these pairs that we analyzed, please kindly type in the chat box so that we'll hear your own opinion. What you say matters. We want to hear your own bias. Where should you take targets as entry on EU and GU, right? All right, so I will just head straight to Euro USD. Just like I said, on my 1 hour time frame for the Euro USD, I'm looking out for a base and a continuation. I haven't really seen that forming on the 1 hour time frame. When I see a base and continuation on my 1 hour time frame, I will be confident enough to go to my 5 minute time frame to look for variations so that I can take my buy to the upside. So I haven't really seen my entry signature for the Euro USD yet. But let's go down to GU. Maybe there's something there for us. right. On the 1 hour time frame, I can see something like a base and a continuation, right? Remember that we always want to buy at discount. I said this quite a number of times today. So I'm just going to do this. And then head straight to 5 minutes to check if there are variation patterns. I really haven't seen any variation forming yet, but this looks like a somewhat like a variation, but this is not what I would want to see. Because there are like two candles and then there's one that engulfed both candles. So after this had formed and beg your pardon. Apologies for that. After this had formed and this candle had closed, I would have been confident to take my buy to the upside, but it has left me in some sort of way. So I would be looking out for more variations. If I can find more variations and price still at that zone, at that level, then I'll be confident enough to take my buy to the upside for Geo. 1 hour time frame. Well, I haven't seen any box entry for Geo on 1 hour time frame. I haven't really seen any box entry for me. I don't know what you saw that you said you're seeing. Okay, I will explain what variation is on the 5 minutes time frame. So when you see two bearish candles or bullish and bearish, right? If I want to buy, I'll be looking for two bearish candle and a bullish candle, a bullish momentum candle that engulfed both candles. Something like that occurred here, but it's not so clear. If I see if I see a big momentum bullish candle engulfing both, then I'll be confident enough to take my buy to the upside. So when you see two bearish candles that are not so wide or big, and then you see and then sorry, I beg your pardon, and you see a long momentum bullish candle to the upside, that is what a variation is. I just marked an example here. I can call this a variation for me, right? Yes, I can call that a variation. Please, I'll answer your questions on different types of variation. What about M15 on EU? Okay. So if you really want to know what a variation candle is, you should sign up for our FX Bootcamp course. We'll give an extensive explanation of what a variation candle is there. All right, time is long gone, so I'll just call on CJ to continue his own analysis after this brief break. Thank you for staying through.
So good morning and welcome back from the short break. This is the Market Caller brought to you by yours truly, the Value Flow Trading team, and powered by your favorite broker, our favorite broker, Opta. During this session, I'm going to be taking you through the analysis for gold, the yen basket, and then we're going to look at one or two other yen-related currency pair, before we call it a wrap for today's top-down analysis as we take on commentaries, question and answer sessions while we wrap it up. So quickly, we're going to be starting off with gold and looking at our analysis for gold. Now, we already know that gold is generally in an uptrend. If you take a retrospect of the analysis on gold that has happened in past months, past years, gold is in a natural uptrend, right? So it's not a new thing when we see gold moving in a period or in a region of price discovery. That is not a new thing for gold. Currently, we've seen gold discover a new price around 2,227. If I'm right, 2,227 or thereabout, 2,227 or 2,223, thereabout. That has been the new price for gold. And whenever price gets to this region of price discovery, we still expect further momentum until proven otherwise by clear technicals and also fundamentals. And then, of course, good old sentiment. So for gold, looking at it on the daily time frame, we are clearly bullish on gold. So anytime we see any further expansion of gold, we shouldn't see it as something new. However, we know based off normal market structure and historical chart data, we're expecting that after a bullishness that creates an expansion, which also causes a break of structure, we expect a retracement. That being said, we're expecting gold to retrace to this level we've marked in previous weeks, all right, somewhere around 2,083 price level. That is one of the places we're expecting gold to retrace to, because anyone who is coming into the market, just look at it technically. If you're going into the market to purchase goods and you're seeing that the prices are too high, you can actually wait, and when demand is becoming less, then supply begins to drop, and then price would have to give you a discount so that you can purchase more. All right, so currently I'm seeing that gold is overpriced. I know some of you are already judging my economic thesis. Well, I don't have an economic background, but however, I understand the chart very well. So knowing that gold is overpriced, I'm expecting that when gold settles down a little, we're going to see a discount in the price. That's what we're trying to say. Okay, since the prices are high, the demand is definitely going to drop. All right, and when the demand drops, we expect that to also affect price. So price is going to drop a little more for people to now afford to buy it. With that being said, we're expecting gold to drop all the way to this level down here. And how are we going to know when it's ready to do that? We usually like to depend on the 4-hour time frame for that. All right, when we have a daily bias, we usually depend on the 4-hour time frame to observe break of structure and know when to ride the price all the way to the opposite direction. Now for gold, this is the last swing. We're going to mark the last swing now and see. So this is our last swing on gold. From this swing high to this swing low, okay? Right? From this swing low, I beg your pardon, all the way to this swing high. This is the last swing on gold. So if we're waiting for a clear break of structure, we would want to see gold break this low right here. You can mark it. You should see gold break this low right here. I would even say you should look at this overall low here, because these other lows here could be points of liquidities to attract price. Price could get to this low, take them out, and then continue trading to the upside, because look at how close they are to the origin of the bullish run. Because of this closeness to this bullish run, I would like to take here as my swing low. So I'm expecting that gold is still going to make a run up until it takes out this price point of 2145. You can mark that on your journal. 2145 is where we're expecting to start shorting gold from. However, knowing the volatility of gold and the reward in terms of risk, we can take shorts and longs in between, because this is the whole range of gold from here to here. This is the whole range, and it's about 2,000 to 3,000 pip range. So we can be taking short caps of 50 to 100 pips in terms of buys and sells. So that is what we're going to be doing majorly for now until price breaks out of this level. So to do that, we'll look at 1-hour time frame. Looking at the 1-hour time frame, you can see what is the prevalent structure on the 1-hour time frame. The prevalent structure on the 1-hour time frame is a buy. All right, you can look at that using break of structures to the upside continuously that has happened, and we've not seen price take out any previous low. So the prevalent structure on gold currently is a buy. So looking at intraday, you can also take a look at the weekly time frame, 15-minute time frame, I beg your pardon. Looking at the 15-minute time frame for gold, I would want to see a run on this liquidity that has been created right here. You can see the diagonal liquidity that was created right here. All right, all these guys here. And then, of course, there's also a horizontal liquidity after that diagonal liquidity. So I'm expecting to see a run on this liquidity to the downside, and then I'll be looking to take longs on gold. All right, so once I see price take out this liquidity and then take out this low, I want to see a buy on gold. So I'll be willing to long gold from this price point of 2,174. That is what I'm looking to take a long. Now, naturally, I would have wanted to sell to buy, but knowing that the prevailing trend is a buy trend, this place where price is not a good place to buy for me. So I'm not going to be buying. Price could even continue extending the buys further upwards. So if I'm taking a sell from here, I'm at risk. So I would want to sell at discount, like we say traditionally. You sell at discount to buy at, sorry, you buy at premium and you sell at discount. All right? Price is not in discount. Neither is it in premium. It's around an equilibrium level. So I would want it to give me a discount price of 2,174. Then I'll be looking to take my buys from there. If it doesn't give me a discount from there, then at this premium level, somewhere around this region, if price is willing to give me a good sell trade around here, then I'll be willing to sell. Remember, we're taking scalps of all this, knowing the prevalent structure. All right. So I'll reiterate it once more that I'm willing to sell here at discount. I'm willing to buy here at discount, and then I'm willing to sell here at premium. Buy at discount here, sell at premium right here. Okay. You can see the imbalances around here and the lack of fair valuation of prices around here. So it's going to be a good place for price to sell from and then grab liquidity to the downside. Overall for today, my first point of interest for gold is to buy somewhere around here after price has taken out this low, buy around here and then buy all the way to this upside. When it gets here, then I'll be willing to sell it forward to this downside. All right. So that is all for the analysis on gold. So those of you who have been asking for the analysis on gold, here you have it, and we really hope you take advantage of it and make profit of all these analysis that we are giving. So this is similar to what I want to see on gold. 30 pips is enough for a gold buy, for a gold trade. And then you should be looking at 1:3, 1:5 marks from trades like this. All right. So this is what I'm looking out for. All right. This level has been validated. We're looking out for something like this. Looking out for a buy of gold all the way to this level. So if price trades into this place, I'll look for my confirmatory entry signatures. All right. And then I'll be willing to long gold all the way to this place. If it doesn't, if price continues to trade all the way above here, then I'll be willing to sell it all the way down here to take out this liquidity like I pointed earlier. I hope this makes sense, and I hope it's also clear to you. Now, over to the yen basket. Now, one of the reasons why we like to analyze the yen basket is that it gives us a clearer picture of what is happening on the yen overall. All right. Knowing that the yen, they are tilting towards positive interest rates, we are now seeing hawkish signs from their central bank governors and other finance executives around Japan. So we're expecting that they would want to intervene in the crash of the yen. Yen is a currency that is known for frequent government interventions. So by interventions, we mean that whenever their currency is going down, the government usually do different things to intervene in the currency and helps it to go up. Things like quantitative easing, things like buying their own debt, that is the GJB, the Japanese government bonds. They like to do all these things so that it helps the yen from becoming weaker to become a stronger currency. But overall, yeah, Japanese are savers and they like stability a lot. So for the yen basket, looking at it this morning, we're seeing that it created a new all-time low on Thursday last week. And since then, we've been seeing interventions that have been showing us bullishness to the upside for the yen. And while that bullishness is taking place, on the daily time frame, we would like to show you where we expect the yen to buy to. One of the levels we're expecting the yen to buy to has been fulfilled already, where we're expecting it to mitigate all the way to this previous low right here. Price has done that. So two things we're expecting from the yen currently is that, one, that price continues to react off this level. We expect it to continue to sell off from this level. Secondly, is that using our good old Fibonacci tool to determine premium and discount ranges, we're expecting that the yen should push further up above premium level, above equilibrium level into some premium. so that you are comfortable selling it. All right. But fundamentally, yen is in a good place to continue selling from, because the government has intervened a little, and we're seeing some push to the upside for the yen, which we saw all the way from Thursday last week into Tuesday. All right, that was yesterday. Now for the yen, we're expecting it to start selling off, but if it doesn't continue selling off from this level, then the next place we're expecting the yen to get to is all the way to this premium level. Now let's highlight some of the premium levels we're expecting the yen to get to, one of which is this right here. We're expecting that across board on yen related pairs, there are some discount levels that price needs to fill. There are orders on the discount level that has not been filled. So on the yen basket, we're expecting price to get to this premium level of around 78.6. If we're expecting price to get to this region of 78.6, then we're expecting all other yen pairs to start crashing. Now, talking about yen pairs crashing, we really showed you how that the differentials or the divergence in interest rates has affected CHF-JPY. You've seen how CHF-JPY has been selling massively. We also expect other yen-related currencies to follow suit, depending on the fundamental releases of their independent currencies. But however, we're expecting that the yen pair is going to trade all the way to this level and start selling off if this level doesn't hold. How are we going to know that this level is going to hold? Of course, we have to move to our 4-hour time frame and 1-hour time frame. Based on the 4-hour time frame, we're seeing signs that this level is going to hold. All right, signs have been showing that this level is going to hold on the 4-hour time frame. So we want to see continuous bearishness on this. With this, we're expecting that currency pairs like GBP, JPY, and the likes are going to continue trading to the upside. So let's take a look at GBP, JPY. All right, so you can see that that is already playing out on GBP JPY. GBP JPY has been finding its way to the upside. You can flip this whole level to see how GBP JPY has clearly traded into a discount level and looks set for a buy. So for me, I'm looking very bullish on GBP JPY, showing what the yen has given us, traced into a mitigation level and is willing to sell further downwards. And then for GBP JPY, I'm expecting that we'll see bullishness continuously on it, seeing that it has traded into a discount level. I expect further buys on this guy. So where are we expecting to buy intraday on GBP JPY? Where price is currently is what do you call it now? It's in a range. It's in a tight consolidation period. We're expecting a breakout very soon. However, from what I'm seeing currently on the chart, if you use the 15 minutes time frame, we're seeing something that looks like a box pattern that has already played out. You can see the left shoulder right here. You saw the sweep, break of structure to the upside, price return. All this happened in the midnight, so we're not able to take advantage of it based on our time zone. And this is a good place where GBP JPY started buying from. You can see it right here. Well, GBP JPY has already taken that trade. Those who trade the Asian session should have been in profit if they are trading this already. Now we expect that GBP JPY should continue to the upside. So what am I looking out for on GBP JPY? I want to see a clear of liquidity. Once liquidity has been cleared on GBP JPY, then I would expect that it should continue buying upwards. All right, seeing what the Asians have done, I know those in Europe would not want to buy GBP JPY at a premium price, so they want to get some discount. One of the places I'm expecting that discount to take place is right here. All right, I'm marking out the levels we're expecting GBP JPY to take out before we buy. Level one, and level 2. I want to see a clear of liquidity on this area of these two levels, and then I'll be willing to long GBP JPY from here. Okay, so once price take out these two levels on GBP JPY, I'll be willing to go long on it. And where am I looking to buy GBP JPY to? One of the very first places I'll usually want to buy GBP JPY to is here. Now you can check the pip ratio to see if it's a good reward for your trade. Now it's about 100 pips, so I'm very, very much interested in this trade. All right, so once I see a good discount of GBP JPY to any of these levels, I'll be willing to go long continuously all the way to this mitigation block right here. Okay, so here you have it, your analysis on the yen. And at this junction, we want to entertain questions from you guys. If you have any questions, please ask while we do further commentaries on all the things we've analyzed. Based on sentiment, yesterday we were showing you how that sentiment has moved to a risk on period. So we're currently having a theme of risk on. Investors are willing to take risk, and all other risk commodities are looking juicier and providing good returns. If you look at FinViz on the weekly time frame, we're looking at this intra-week, knowing that Q1 is ending tomorrow and next. The investors are already showing signs that they are willing to take on risk. As you can see, currency pairs like NZD are leading the race. AUD and CAD, they are nowhere in the negative zone. So you can also see that safe haven assets have all moved to the negative side. All safe haven assets have moved to the negative side. So investors are seeing that there is more yield when they take on more risk. So you're seeing indices like NASDAQ and Dow Jones and S&P all ranging or trending to the upside. You're seeing currency pairs like XA, AUD USD, NZD USD, and the likes. They're all trending to the upside. You're also seeing Bitcoin and other cryptocurrencies that are closely related to Bitcoin all trending to the upside. It's showing us that investors are willing to take on risk. So the current team in the market is showing us risk on as we are ending the first quarter. At this point, I would also like to let you know that you need to be careful in your trades, seeing that the first quarter is ending, and but people who want to run trade balances across board. So you should be careful with your trades so that you don't get caught in between. All right. So that being said, we've already done our sentiment, knowing that we're in a risk-on environment. Based on fundamentals, we're expecting GDPs to be out tomorrow, so that we're going to see how economies have fared in the first quarter. This is another reason why you should be very careful in your trades. Europe, Great Britain, that is the UK, US, Canada, and the likes, they're going to be releasing their GDP, the final GDP for this first quarter. So we're going to expect a lot of volatility in the market. With this being said, we urge you all to be careful and apply proper risk management to your trades. So by tomorrow, probably, or tomorrow, we're going to be analyzing all the GDPs to see how all these economies have fared in first quarter. Now back to the chart. We're summarizing this with GBP JPY by saying that we expect it to buy off when price comes to either of these points of interest for us. All right. Then for Euro JPY, I don't think it's going to be very rewarding to take a buy on Euro JPY because sentiment-wise, GBP is way stronger than the Euro. So we're looking to take GBP buys instead of Euro JPY sells, Euro JPY buys. All right. We're going to check. I don't think there's any other question. So at this point, we're going to be wrapping up our top-down analysis for today. The question says, please, EUM5 is a recent candle formation a variation pattern. Now, it's going to be a disfavor if we start teaching you all the things we teach our FX bootcamp students. Okay, they paid for this service. We're teaching it to them. If we start teaching it to you for free without their own discretion, it's going to be a disservice. You paid for something and someone else is giving it out for free. So I think it's fair for us to now tell you, to get more information on this and a detailed learning experience on this, you should sign up for our FX Bootcamp course. It's not very expensive. It's only 125,000 naira compared to what you're going to get. We're teaching you 3 strategies combined into one course, 3 strategies in one course, and access to all the tutors on the course. So it's quite fair for us to give you that price of 125,000 naira. Once we get the number of people we want, the price is going to go back to 150,000 naira. So now that this offer lasts, make sure you take it as fast as you can. All right, when you get access to the FX Bootcamp, what we usually do there is that when students ask questions, we hold a video call with them and then answer all their questions until they are satisfied. That is one of the commitments we give to our FX Bootcamp students, okay? I hope that is clear. At this junction, we're going to be coming to an end to today's London session of the top-down analysis, or what we now call the market color, for today, the 27th of March, 2024. Just so you know, we have all our available offers still there. We have... All right, any question that is dropped in the group will be answered in the group, okay? So we have all our courses very much available. We have our FX Bootcamp, which is currently running for 125,000 naira. Make sure you grab it so that all these things we are teaching, you on your own, you'll be able to analyze it for all the various pairs that you are trading, and you just use our market color for extra confirmation on your analysis, okay? So make sure you grab a copy of the FX Bootcamp. And then finally, we're teaching the box strategy for free. next week. All right, we're holding a class for the box strategy next week. So make sure that you sign up to the box strategy course so that you learn how we use the box strategy systematically to make profits from the market and trade in a risk-adjusted manner. All right, so these are the offers we have for you today. We have our bots, we have our prop passing services, we have our copy trading services still running. For those on the copy trading service, congratulations to you. We heard that last week you made a very good withdrawal, and we are very glad that you are profiting from all the services we're giving to you. So until we meet again, 3 p.m. is the time for the New York session. Wish you good luck and good trading. The link to the box strategy is going to be sent to the Market Color group today, and across all other social media platforms. You're going to get the link to sign up for the box strategy today, latest by 2 p.m. GMT +1. The link is going to be dropped. So make sure you take advantage of it, and then send it to as many people as possible who want to learn Forex but do not have enough money to afford the proper Forex course. We're doing this for the community, okay? Wish you good luck and good trading once again. Cheers and God bless, guys.